In today's video, traders, we're going to talk all about the pin bar, one of my favorite candlestick pattern setups, and we're going to talk about how to actually effectively use them and spot them in the foreign exchange market. Let's go ahead and get into the video right now. Hey traders, welcome back to the YouTube channel. If you don't know me already, my name is Nick and I share all sorts of foreign exchange related content here on YouTube. We talk about concepts and including kind of technical strategies. We talk about trading examples and all sorts of other good stuff regarding trading. So if you're new here and you're enjoying this content, make sure you subscribe down below and give the video a thumbs up. So today we're talking all about pin bars. And if you don't know what a pin bar is, or you're not exactly sure what this concept means, stay tuned. We're going to dive into exactly what a pin bar is, and we're going to talk about some ways to spot them and to actually trade them in the foreign exchange market. So before we go too far, we need to talk about what exactly a pin bar is. Now, there are a bullish and bearish pin bar examples that we're going to get into, and they have some slight deviations from each other, but let's first talk about how to spot an example. So the first one we're going to talk about is a bullish pin bar, okay? And what we have here is, let's say that we have a candle here and we have a long wick on the bottom and a short wick there. This is what a bullish pin bar, we'll put bullish pin bar. Okay, this is what a bullish pin bar actually looks like. You can see it's got a small little body here. You can see there's our open, right? There's our close. There's the low and there's the high, okay? Right, so there's our standard candle, and this is what a pin bar looks like. But what does this information tell us, and how can it lead to some potential good setups when it comes to trading the foreign exchange market? Well, what this tells us is that it tells a little bit of a story. And when we're talking about price action, such as a candlestick pattern, which would fall under the price action concept when it comes to trading, we're trying to read the way price is moving in the market to get an idea or an understanding of what current market participants are thinking and what they may be ready to do next, right? When we're trying to take technical trades, we're looking for setups that give us an example of what could happen next in the market. Well, what does this pattern here tell us about the market? Well, if we break down the kind of structure here and we look into what this movement really shows, is we have a market that starts to go down, right? Initially, actually we'll make this red so that this is, or pink, so it's a little bit easier to understand. We have a market that shot to the downside, right? And it came down and formed a low. But towards the end of the candle, what happened? Well, we made a resurgence back to the upside, recovered the entire move to the downside there, completely erased the bearish movement that was there, and only left a wick of a trail behind. Okay, well, what does that tell us about market participants? Well, it may mean that bulls have stepped in and pushed price back down from these lows, right? It took a lot of buying to push price off of the lows here. So maybe as price was going down here, we had a lot of sellers coming into the market, but then buyers said, you know what, enough is enough. I'm going to push this price back up, and we pushed all the way back up and even closed bullish, right? So then we have the bullish pin bar. Well, that's a good bit of information to get started with, but let's add on exactly what this kind of means and how we could potentially trade this setup. So again, let's say that we have a market that is making a movement to the downside, right? So we have a downtrending market, and suddenly we are we're putting in red candles, red candles, red candles, and you see something like this happen where we form that bullish pin bar example that we just talked about. So we're zoomed out a little bit here, and we're looking at a bigger time frame chart here, or we're looking at the price movement. And what do we see? Well, we see a market that's made a movement to the downside. Sellers are in control, right? So sellers control this market, okay? And they're pushing price lower. Price is making a movement to the downside as sellers hold this market. But then we get this movement. We get that bullish pin bar. And what that signals is that buyers have stepped in, and potentially buyers may control this market now. Okay, and the idea here is that the next move could be a resurgence or a reversal to the upside, right? So as buyers step in down these lows, right? The pin bar there we'll put again, our bullish pin bar is down here, right? and we've bought up into this market and pushed price off of the lows. Now, as it starts to rise, we can see that that would be a good example of a potential entry. So when we spot something like this, this might be a clue that the market is ready to reverse and go back the other way. Is it a guarantee? No. When it comes to trading, it's all about probabilities. Okay, so we have this information and this could be useful to us, but how could we actually set up a trade based on this logic? Well, let's see if we can back up a little bit here and clean this up a bit. So if we get this information, right, so buyers are in control of this market, or at least they seem like they might want to take control, how could we enter, how could we exit using this information? Well, let's say that on the very next bar, we take a buy position, right? Because remember, we're looking for the reversal, right? So the market's in a seller-controlled market. We see this pin bar print, and on the next bar, let's say that we look for a buy position, right? And our idea here is that we see a continuation back to the upside. Well, how do we manage our risk, and what do we do for a take profit? Well, one of the most common ways, or one of the most practical ways, in my opinion, is to look to put stops underneath the recent structure, right? So a stop loss underneath that wick there, because that's where we saw buying pressure. And if price decides to break down, then no big deal. We stop out and we find another opportunity. But the stop loss would go, that's one area you could put it. Other people will put it somewhere like halfway. Other people will put it further away, depending on what you actually end up liking to do with this concept is ultimately your decision. But then we have our buy here. Where could we put a target or a take profit? One way to do it that I personally would like to do is to do something like a 2-to-1, right? So we have, let's say that we put a target or a TP, take profit there, of 2 times that distance, okay? So we measure this distance, and let's say that, for example, right, let's say that this is a 50 pip stop loss, okay? Well, then in this case, a 2 times our risk area would equal what? It would equal a 100 pip take profit. Okay, so we'd be looking to risk less than we are potentially going to make on this move. And so if this plays out, if we are correct in our analysis, then we could see the reversal and catch this move and use this area as a good way to potentially look for an entry. That's a good example of a bullish one. Now, I do want to quickly say that we could also see this on the bearish side. So this would be an example of a bearish pin bar. Let's say that we have a market that's making a movement to the upside, but then we print something like this, an inverted version of what we just saw. Well, this would be considered a bearish pin bar. We'll put PB. And the idea here is that this could call the reversal back down, right? So buyers in this case are in control. And then we see this bearish pin bar before a reversal in favor of the sells. Okay, very simple concept, but the idea here is, again, we see on this, if we kind of expand this out, right, the idea is that we have a major move to the upside. Buyers are still in control, but then sellers come in and basically smack down that price, showing that there's a lot of sellers or resistance in this potential area. So one more thing, guys, we've talked about ways we can identify this concept. We've talked about the logic behind it, and we've talked about some examples or some illustrations of how we could use this. But let me add on one thing here. The idea also is that, again, this is not going to be a perfect indicator by itself. There are other things that you probably want to combine, at least in my opinion, when doing technical analysis, such as, let's say that we have this market movement to the upside and we get a pin bar, right? Well, we could tack on some other information here to potentially increase our probability of success. Well, what if we also line it up at a key level of resistance, right? Well, now we're using 2 factors. We're using a candlestick pattern price action point, and we're using a resistance point. So we have resistance and we have a bearish pin bar. And remember, as traders, especially technical traders, we're trying to stack as many things in our favor as possible. We're not trying to do it all just off of one little indication that the market may reverse. We're trying to combine multiple things to see that we can overall produce more expected results by being correct more often than not, or letting our winners really run, rather than trying to get every single thing perfectly right. So it's important, as always, to check out some of the risk management concepts. You can check out one of our risk management videos right here. I highly advise you check that out. If you don't know much about risk management, it's very, very important to trading success. Guys, thanks so much for watching. We'll see you next time.